A very warm good morning to everyone. Welcome to the thematic track on mobilizing finance for low carbon transitions in India, role of green bonds and partnerships at the 23rd edition of the World Sustainable Development Summit. Before we start, requesting everyone to please put your phones on silent, provide context for today's discussions. I welcome Mr. Manish Kumar Srivastava, Senior Fellow and Associate Director at TERI, to shed light on the instruments for mobilizing climate.
Thank you, Ashmita, and let me also take this opportunity to welcome you all for this session. What the plan of this session is basically that we have done some research. We have some questions around the question of mobilizing finance, and we are zeroing in on two themes. One is related to green bonds. The other is the role of different types of partnerships. So this brief on green bonds is what we are kind of informally launching today. We won't probably waste time in having that formality. So we'll make a quick presentation on what our understanding is on accelerating the growth of green bonds as an instrument for mobilizing finance, but also share a few initial thoughts about how we are trying to look at and understanding the various partnerships. And following that, we want to have a kind of a pre-discussion on what your thoughts are about these two instruments, but you can venture into other areas as well. I would not that moderation part we will leave to Mr. Deepak Das Gupta, who is a distinguished fellow at TERI, but previously has been advisor to the government and also at the board of Green Climate Fund. So, and of course, we always look up to him for guidance. So I personally see this discussion as kind of probably setting a agenda for us to find few research questions and that we would focus in the coming year on. We have a very interesting, as you can see, a group of people. We have representatives from government, a few banks who can influence significantly both policies and the thought process, as well as think tank representatives who have been looking at this question of how we mobilize and make accessible finance for climate action. So we also wanted to have a few people from industry, but currently in the evening there is a parallel track, so they said they want to focus on that. So this is also a little bit of publicity for the evening. That Tata Capital is hosting a thematic track on finance at 4. So if you could stay for that, that would be very excellent. So I'll go through quickly with the presentation.
Stakeholder.
Yeah, please. Yeah. Okay. So with a bit of background, I've already said, we know a lot of money is needed. Both public, private, and institutional investments have to come together. And we also need to think of innovative instruments to bring that money together. As in the opening plenary yesterday, it was amply pointed out that the financial market are flooded with money, but the question is, why is it not moving to climate action? That's really the question. So we think that the two issues, the two instruments are important for two very different reasons. One, green bonds, I mean, in my view, it's a kind of an aggregator of private investments. That's a very potent instrument. India is an emerging market in green bonds, so the future is something that we really need to look at. And also, it's in a way, it's a measure of revealed preferences of many smaller and institutional investors. So that's kind of how green bonds perform is an indicator of what the mood of the financial markets is. On the other hand, different types of partnerships, they really send very strong signals about the collective direction that we want to take about our economy and where we want to make investments. So what we want to drive the growth story. They are also important from the point of view that they in one way or other lead to grant equivalent transfers, which play an important role in bringing down both the risk perception as well as cost of capital. And overall, they create the kind of the indicators of what kind of ecosystem would work. So in that sense, or not work. So taking cues from the partnerships can really, and their performances, their effectiveness would probably help us identify, think about the policy framework around finance. Again, focusing more on green bonds. I think the people in this room, they are very much familiar with why green bonds are important in technical terms, but the vexing part is that while the global market is impressive, has been impressive. More than $2 trillion have been issued in last 15, 16 years. That growth is exponential in the sense that 18% of this total issuance happened last year only. But if we compare that, compare what's happening in India's market with the global market, then things are a little worrisome. Or not worrisome, but I should say that that's a puzzle that we were hoping to understand in this session, hopefully, that you only have 21 billion cumulative issuance and only 3.8% of the total domestic corporate bonds. So it's really on the margin. So there is potentially greater scope, but that is not being unlocked. And how do we go about it? So from the literature and the messages that we hear in different workshops, we find that there are market level challenges and there are also issues related to how bonds are issued. Low rating of bonds issued in India is one barrier why we find that most of the investments in the bonds issued in India are from domestic sources. So the international investors are not putting their resources in this instrument. Of course, the issues related to currency volatility, hedging costs, they make people skeptical. There is very small size of secondary market. One thing that we have been hearing a lot, and this comes from the part of the discussions within the task force that Ministry of Steel has set up for mobilizing finance for decarbonization. And there are 13 different task forces, and every task force asks this question: that where is the definition of green steel. And that is where, I mean, the hesitation that what would happen if we invest today, how would that be counted tomorrow, what would be the stakeholder reaction and so on and so forth. So that's the question of taxonomy is really in one way at the center of challenges. Demand for fiscal incentives, suitable facilitative regulations, and so on. They are kind of standard issues when we think about policy, but particularly when we are thinking about transition, that what are the policy enablers and fiscal incentives. From the issuance side, we find that there is kind of a mismatch between the size of green projects and the amount that is mobilized. That mismatch is across and particularly much more bigger when it comes to hard to abate sectors. There is also lack of sectoral diversification in terms of where the mobilized resources will be utilized. And of course, the high cost of obtaining external certifications. So that kind of creates a kind of an aura of lower trust around the green bond issued in India. So we synthesized and we thought that there are four broad areas where interventions could help in exploiting the potential of green bonds in India. One, of course, is to begin with, we have to be very clear on taxonomy and standardization. Beyond the taxonomy, I think the tiered classification of certifications could be an innovative idea there. India's economy is very diversified. The needs of different actors are different. Their risk appetite is different. Therefore, that kind of the reflection of that diversity in taxonomy and standardization could be more aligned with the economic activities in India. In terms of fiscal and policy levers, we need to, of course, minimize the issuance costs. There have to be incentives for investments. The question of credit enhancement is coming from different examples. I think the kind of guarantees to investors enhance the scope of money available that can be available from different sources is very important, and removing regulatory bottlenecks can be very helpful. And of course, all this will happen in only if there is a relatively lower asymmetric information. So creating information and awareness would be important, since we are identifying the lack of interest among the international investors. So cross-border collaborations for creating awareness and building trust are absolutely important. Then there are suggestions about securitization of bonds, providing some project backing or asset backing to the bonds that are issued. There is pooled financing mechanism issues and some bit of a discounting principal repayment, which is the idea of kind of a performance linked returns on green bonds. So that there is a kind of it's a variation of what I call the top runner program in energy efficiency. So for efficiency of financial instruments, also we can think of some sort of a variant of top runner program. Okay, I think I moved ahead with these elaborations in that slides also already, so I would skip through quickly these slides. and come to the second part of or theme of this discussion today is partnerships. Now we find that there are a number of partnerships around finance or bridging the finance gap or facilitating flow of finance that have come up. There are four types of partnerships that we focus to begin with. The fourth one is not listed here, but will come in the next slide. One is the idea of bilateral partnerships. For example, Article 6 of the Paris Agreement provides for cooperative mechanisms. Those partnerships can be trust-based, more strategic, and can be used to unlock many barriers. Then there are some partnerships which are very technology or purpose oriented. So India and Germany have a partnership on green hydrogen. There has been great enhancement. So number of partnerships between India and Germany, India, US have been very instrumental in bringing or opening up the transformational possibilities in technological deployment scene. There is this idea of that. So that's also, I consider it as a bilateral partnership, but this can be, think about that, whether we treat it as a partnership. I'm thinking anything which requires some sort of a negotiated understanding as a partnership. Then there are the multilateral or plurilateral partnerships. JETP is something that has been talked about a lot. But in India, it is it has not taken up, despite the fact that both US and Germany have been trying to get India on board. But there are issues of political acceptability. The terms of partnership are important there. Then we have something called the Glasgow Financial Alliance for Net Zero. The banks have this partnership with this with identifying that the financial sector or the institutional direction setting can be a very strong signal. And of course, that can many of the partners in this alliance, they do have the established capability to influence policy reforms as well. Then there is this experiment of tiered risk guarantees, something that ISA has launched last year in African region, where it's not just the first loss type of guarantee, but there is government guarantee. There are multilateral regional development bank has provided additional guarantee. And then I think, what is it? It's Sweden also had provided a guarantee. So there are these multi-layered guarantees which have been experimented. So they do have so these are all ideas. And then there are a number of partnerships that are established by or initiated by and with philanthropic organization. The philanthropic leadership platform under the UNFCCC is the recognition of the potential. There is also last year specific partnership with Bloomberg on capacity building. There is also climate finance leadership initiative. I know CPI is trying to set up or thinking of setting up a collaborative hub in India, specifically focusing on mobilizing finance for urban climate action.
CCFLA.
Right? Yeah. So now this is something that is pretty much work in progress. And but we thought that, okay, there are too many partnerships. And how do we look at what kind of partnerships are good, or whether we need to think of partnership between partnerships as well for better effect? We thought that maybe the 5 areas could help us think through this question. if whether a partnership helps a country in building capacities, both technical capacities of at the institutional level, at the industry level, and the financial actors level, whether it brings down the cost of capital, whether it has a more sort of guaranteed promise of technology upgradation, whether it increases public finance capacity. I mean, this is an idea which I think is important. We understand that public finance will play an important role in mobilizing private capital, but the public finance capacities of the government itself is a barrier. So what can enhance the public finance capacity of the governments, and whether these partnerships in one way, some way play a role there is something very important to think about. When I think of the mechanisms of like GCF, I have a feeling that that's a very the climate finance that comes from GCF is a very odd kind of public finance which behaves like private finance, because in order to access that money, you have to put in a lot of effort in the first place. That's a barrier. Whereas the basic idea of public finance is that when nobody is going, it has to be gambling. But the kind of certainty GCF demands is a barrier. So I think that's the thinking needs to rethought. And of course, in partnerships, the political acceptability is important. I wouldn't elaborate on these, but the question marks are some areas of concern where immediately I could not place whether for example, debt swaps or JETP would necessarily reduce cost of capital. In that case, in context of cost of capital, what I learned from our research partners from Brazil is that even if you have concessional finance, the nominal rate of interest is very low. The total capital requirement is so high that your processing burden itself over the time is huge, and that's a deterrent. I think that's something that is not talked about too much, that the absolute volume of the cost of capital, not in terms of the lending rate, is also important thing to consider. So that's something important in what would be the terms of debt swaps, whether the interest would be part of the accounting. There can have a serious political acceptability aspects. So the fourth category, which was not in the previous slide, is the partnerships with MDBs. This is broadly being thought about in terms of the reform agenda, but there are obviously open issues that I think I have taken a lot of time already. So I'll leave with the slide that these are the questions that the team at TERI is grappling with. This work is done with Uday here, and where is Ashmita? Ashmita here. So I'll leave now to you, Deepak Dasgupta, to help us go through discussion. Thank you.
Absolutely perfect. I know I speak for myself, and I know I speak for others as well. If you think about where India is headed on the climate and on the sustainable development pathways, I think we're just beginning to get started. People don't realize how big the role that India is going to be playing over the next 20 years. And I think most people are beginning to realize it. And bond markets, the green bond market is going to be one of the critical institutional drivers. We all know this. The question is, right now, I think Manish and your team, you've done a brilliant work. Thank you so much. It's helped me understand some of the nuances. I think the partnership side of it is not yet in the paper, right? So that's coming, that's a critical part. So it'll help. But we are equally delighted today. We have a tremendous panel. So thank you all for joining us. So what we actually want to do is go through with your comments and suggestions and how you see the landscape changing. And it's really about bond markets generally, however we classify green bonds, transition bonds, brown, the whole thing is there, even to the extent of, so we are, what I'll do is I'll introduce each of the panelists turn by turn, and then get your comments about, and maybe you can help us on the commentary side, depending on where you come in, on what is the additional work that we need to do, if any. And what's the key points at which you think what are we missing in seeing the scale and growth of the green bond market, call it which you will. So that's my way of going in. So we are really delighted that Ms. Chandni Raina is here. She is from my old department, which is she's the economic advisor for the Department of Economic Affairs in the Climate Change Finance Unit. I'm so delighted that you're here, Chandni. And she's worked in many other sectors. And she's served as the director of the Department of Industrial Policy and Promotion, the Ministry of Labor and Employment, and of course, as a professor. So, Chandni, over to you, and I'll introduce each of them in turn. Thank you so much.
Thank you, sir. And I would want to, at the outset, I think this initiative of this discussion is very, very appropriate. Is financing India's climate action has been a subject that is now a matter of deep discussion within the ministry. Considering that we've made an announcement of net zero by 2070, it implies that we need to peak and then transit, while also ensuring that we do not in any way compromise on our growth, the developmental priorities. So effectively, the resource requirement for climate finance is substantially high, considering that any pathway we follow, there is going to be transition costs, and those transition costs have to be factored in. And we need to also, so the climate finance would need to address them as well. So basically, we're looking at, so in a way, when you're talking about transition of hard-to-abate sectors, so financing of that transition is also part of climate finance. It's not just mitigation alone, but in this form as well. Having said that, I think the green bond market is an important. So let me also talk about how we approached it initially. So the initial discussion prior to, let's say, 2020 was that it has to come from the developed countries. So that's been the discussion throughout in the UNFCCC, that much of what is happening now is because of the developed world and the resources must flow from there. Also, the added issue of our own developmental priorities requiring substantial investments. The question is, do we have the capacity to do climate action without compromising on our developmental priorities, or should we just have a ceiling and that we will not grow beyond a certain level? And what is it that would mean for a country as big as ours? So, but what we've realized down the line is that the money is not coming in from the world. And even if it is coming in, those 100 billion that they're talking about or whatever else comes in is more like an investment proposition. It's not coming at any concessional rates. Or if it's concessional, then the government of India needs to bring in that concessionality. In a way, government is having to bear that cost as well. So so lately you would have seen the kind of changes that are happening. The green bond market, of course, the regulations that came out from SEBI, then the green deposits, also the framework that was brought out by RBI. And prior to that, with the RBI green bond framework, we came out with our sovereign green bond framework. And the whole idea was to deepen the green bond market, to diversify, to create basically an ecosystem where the green bond market can work, and we should be able to generate our own resources. And perhaps also at the moment, sovereign green bond is pretty much domestic, but hopefully we should go beyond that as well. The sovereign rating is a big issue. And this is one of the important concerns that DA is also looking at, because we're not we don't feel that this is the right appropriate rating for us. And there've been several papers. I think the chief economic advisor has written also in the newspapers on the credit rating and the need to revamp and basically democratize the rating system as it exists only amongst the 4 big players to more, so that we get better assessment of ratings. And so that's where we are. But in the sovereign green bond market, we got some greenium, as they call it. But yeah, it was about 4 or 5 basis points. That's how it is. But my understanding is that is how it is also on the whole. So it was not a bad way in which we processed. The recommendation that we should bear, as the government should subsidize the cost of getting the second party authorization or the branding of that particular green bond, I take back. I will take back. But yes, those are very expensive. And it's a very, so our own engagement with CESARO was very, very intensive. Several months and meetings every week. So it was not easy at all. So for a company or for a municipal body to do that will be not easy at all. But we need to look at that part. Do we leave that and then do I touch on the partnerships, or should I just allow discussion?
Maybe we come back if that's okay, right? Let's do one round, because the partnerships one will compare that. Just as a thought about thinking about where we are on the macro side of the story, the macroeconomic context. One is that the global bond markets, the indices are starting to include India. And that's a big change that's coming. Because the moment you do that, moment the JP Morgan, and it's going to happen imminently, moment India is in that JP Morgan index of bonds, suddenly you've got it's just a stock adjustment. You'll get, we should be anticipating that there's going to be flows easily in the tens of billions, if not more, coming in. It'll go towards G6 primarily, but there's spillovers. The moment it moves into G6, the private bond markets will also benefit. So in a sense, working towards your goal of getting the credit ratings, it's already happening. That's my gut feeling. We are already going to see, you are going to see the benefits of India's very strong macro position coming through, and increasingly powerfully. So you call the shots, in fact, in how you decide to play this. The other part that you mentioned about is the question of, it's true that we will never be in that $100 billion a year thing. So that's a matter of global kind of thing. Yeah. But where India does benefit is the cost of its credit. It's what it gets. And I think there are significant changes possible as the flows begin to emerge. And the credit rating eventually will adapt almost. So So big change is coming. So that's my macro sense. The other part of it is, of course, that India is already receiving massive enough flows in an aggregate sense that RBI is having to absorb that excess fee. So there is, in a sense, we are actually quite comfortable where we are. And the question is, if we get the right kind of flows that helps us to achieve exactly the goals that you identified, we are probably comfortable. So we are at that cusp of change. So my just quick reaction. So I think you're on the right path. So we are very lucky to have Pradeep Tharakan here. He's the Director Energy Transition in the Asian Development Bank. And he is in the origination, financing, large-scale clean energy investments. And he also has this transition title. So over to you, Pradeep. Where do you think we are headed? And we'll come back to the point towards the end.
Right. Thank you very much. Thanks to TERI for having ADB here. So maybe I'll just quickly walk you through ADB's own experience with both in terms of, and maybe I'll use the word thematic bonds rather than green bonds. As I said, let's use a more generic class of assets, right? So we've essentially started more than a decade ago by actually issuing our own ESG bonds. I mean, so we had to, learn the process. We raised capital to do our work. So we issued green bonds, climate bonds, social bonds, gender bonds, all of them. So then what we did is we turned around and we said, okay, now we need to help our client countries to do the same. So on the sovereign side, the public sector business of ADB, we are very active, for instance, with the ASEAN Capital Markets Authority, trying to develop taxonomies to train and support capacities of our sovereign clients to issue bonds. So for instance, the Thai government's first sovereign sustainability bond was assisted by ADB. We also helped some of the large state-owned enterprises in Thailand and Indonesia issue their own first maiden bonds. So there what we're doing is essentially helping them to develop the framework and often using grant finance to pay for the transaction costs of the certification agency, the second, the SPO, and so on. So there is that little bit of a nudge that's needed, get these institutions to start thinking about it. And all of that hand-holding, as Chandani ji said, 4 to 5 months of intensive meetings, rewriting of frameworks, making sure it's aligned with the International Capital Markets Authority or the CBI framework or the ASEAN framework, making sure a lot of this is also narrative, right? You've got to get the local SEBI or the equivalent to come on board. You've got to get the investor base to line up. Is it going to be private placement? Is it going to be, a public retail placement? Are we going to get the lead arrangers to really market this? So a lot of that narrative setting, by having ADB in the mix, you build that credibility. Then what we've done is some of our sort of key private sector clients, we actually started participating in the bond issuances as anchor investors or cornerstone investors. So that brings in, again, a lot of credibility. And then often international investors will start looking at this bond issuance because ADB is in the mix. So we've done that. In the case of India, I think previously, nearly a decade ago, one of the sort of innovative things we managed to do, and I see that's documented in the report, thank you very much, is that we looked at credit enhancement of essentially infrastructure bonds in the country. So a lot of project-based issuances were coming up, new issuers who are, less than AA. So there was a need. So IFCL was providing a partial credit guarantee for these bond issuances. And so ADB was standing behind to provide a counter guarantee to that. So that actually elevates it to AA, right? So that brings in institutional investors, domestic. And even marquee names like Renew Power, which is a marquee name today, at that point was actually, not rated AA. And so this is one of the first bond issuances that we actually worked on. Now where we are today is that we're looking increasingly, speaking about transition finance and sort of, project bonds, marquee issuers don't have much trouble. They have the resources, they're able to go to market, they can tell the story. But when you start looking at much more aggregated context like SMEs, transition finance, especially let me talk about SMEs. Now we're starting to now engage with NBFCs, which actually would be interested in working with us to help them with their bond issuances. And even on the pricing front, we would actually be competitive. We are not competitive with the big banks. That's not our place anyway. But what we're finding is it's very hard for us to come up with an asset base for them to use. So we're actually we've had more success working on things like gender, social, sustainability, but not so much green because they don't have enough high quality assets put up. So that's sort of an area where we're working on. So recently we helped L&T Finance, and this is a private sector deal. It's already done, so I can talk about it. And this was actually a social bond. So we are now talking to a few, they're in early stages, so I won't mention them, to look at potentially a green bond as well. So that's the space we're at. And there are some challenges and ideas around currency exchange and intermediation. Maybe we can come back to that.
Sure. Perfect. I think, yeah, it's interesting that the NBFC is looking for the asset side. The social side is great. I mean, that you're doing it, but we'd also like the SME sector. We were talking about the hard to abate sectors and the brick kilns and others transformation. There's tremendous possibilities. So finding the right instruments. Thank you. So we now go to Manas Puri. He's been senior professional of the New Development Bank.
Yeah.
Perfect. And before that, he worked at the FAO. And so tell us how you see the lay of the land on the.
Well, thank you so much. And also thank you for organizing such a wonderful event. I must say that a lot of the things that I thought I would say were already covered in the presentation, to be honest, but I would just like to bring your attention to a couple of things. First, a quick background, because we're still a new bank. NDB was established in 2015. It was the BRICS banks. The BRICS countries came together and said, we need to establish a financing institution for ourselves. And since then, since the inception until 2023, we finance around $34 billion of projects in the member countries. In India alone, our investment is around $8.6 billion, spread across 5 focus areas, majority of it being sustainable transport sector or water and sanitation and energy sector. Now, when it comes to bonds, we are such a new institute. So initially we started with loans, concessional loans to sovereign guarantees. And lately we've sort of moved, in addition to sovereign loans, we are also providing loans to private sector, non-sovereign actors. In 2023, we issued our own first green bond, $1.2 billion in the US market, subscribed to AA. So we are getting there. We have a lot to learn from the other banks, the World Bank and the Asian Development Bank, that have been doing this so far. What is interesting, and I think aligns very well with the discussions today, is that in our own general strategy, we've said that 40% of our investments would be climate smart investments. So 40% of all the loans, all the investments we make in our member countries will have to conform to the country systems in which they define what green is. Which also brings me to the discussion also today. And a couple of things that were mentioned earlier, and for me personally, I think are the 2 biggest challenges facing this is, one is taxonomy. We need to be very, very clear to have standardized approach. When we talk to other stakeholders, often we don't understand each other because we don't have a common language in terms of standards. What is green? What is green in India might not be green in South Africa. So there is a lack of the standardization across countries where we can go and sit down. So a lot of the effort is actually wasted in first trying to come up with a narrative where we actually are speaking the same language about what green is in financial sense as well. And when I was in FAO, this used to be huge discussions. I was part of the UNCCC. Even then, the discussions were always centered around how do we quantify and qualify what green is, and to what extent green matters, especially for our developing country point of view, because we were discussing before it started, there are always trade-offs. So one cannot just look at, okay, we need to do sustainable green investments and forfeit or let go of some of our own personal or national development priorities. So the idea of standardizing and coming to a common understanding of what green is, I think, is paramount. The second thing that I would like to bring to the table is what touched by the presentation is the idea of financing technologies that are not stable, they're not proven yet. No, it becomes very difficult for big banks, big agencies, also the GCF or NDB, to finance projects that at the outset cannot guarantee some sort of a green benefit. And that is a huge challenge for small players, people in the private sector who want to experiment, come up with technologies, bring people together and see which technologies work. Often do not require massive investments, so it's not interesting for big players, big banks, but it's also not as small as as the fact that they can go to a private sector bank and get that kind of money at a cheap rate. And I think that is a huge gap in this space, because as an entrepreneur, your job is to experiment and come up with new technology, specifically in countries like India and Brazil and South Africa. We need to find a financing window for small scale players who can go out, experiment. Out of the 10, maybe one technology might work, but that is what we need. We need to identify that one technology and scale up, instead of depending on many other countries to bring in technology, which we all know is very expensive. So also the GCF, for example, GCF gives grants. I agree with you that it's another way of having public sector money being used as private sector money. But then for the GCF, their climate narrative needs to be so strong that a small scale player will never get it. So we need to find a window domestically or internationally or multilaterally for banks like NDB or Indian Development banks, where we start financing small players that have the potential to be scaled up. And I have another point on partnership, but I think we'll do another round on partnership.
Yeah, if we can. Thanks. Thank you so much. Thanks so much. We'll come back to that, also the technologies question. We're delighted that Gagan Sidhu is here. He's from CEW, our great partners. We work on the similar space. So prior to that, he was with GMR Renewable Energy and in investment banking. So Gagan, tell us, where do you see the lay of the land in terms of the prospects and potential that India has, and what's holding us back?
Right. No, thanks for that. Thanks for that, Deepak. So let me start by maybe contextualizing this whole thing. When you look at it from a climate lens, right, emissions lens, 70% of India's emissions come from three sectors. I call them three sectors. 40% is power, 20% is industry, that's steel, cement, refineries, fertilizers, and 10% is road transport. You want to decarbonize, you want to get to net zero, it's these three where a lot of the activity needs to take place, a lot of the investment needs to take place, right? I think there was a Bloomberg number out there for India's net zero requirements by 2050. At CW, we have our own number, and that is $10 trillion by 2070. If you think of it, 10 trillion sounds like a really scary number. It is quite a big number. But if you average, sorry,
Small.
yeah. So well, the thing is, trillion sounds very daunting. But if you sort of average it out over 50 years, the average annual requirement is actually just 200 billion, right? So that's the number to sort of think about in a way. And when you sort of look at it, dig a bit deeper, per that report, that analysis that we did, we estimated that 65% of that money could be mobilized from conventional sources, leaving a gap of 70. So really, we're talking about money going to these three places: power, industry, mobility, in the order of, on average, $200 billion. Of course, it's not a flat number. It's lower in the beginning and rises at the end. And there's a gap. Now, having said that, where is this money going? What is it required for? At the end of the money trail, for all this capital is actually hard physical assets, which we can touch, feel, and then also repossess if we have to, which means that they tend to be majority debt financed. So whether you're talking about money for a solar power project, which is housed in a special purpose vehicle, whether it's an electric vehicle that we're going to buy in a personal capacity, right? It will be majority debt financed. And when you then take that sort of line of thinking further, there are actually four engines of debt finance, right? There's the domestic banks. I'll use banks and NBFCs as a bank, as one umbrella term. There's the domestic debt capital markets. There's the overseas banks and the overseas debt capital markets. And if I were to sort of talk specifically about the power sector transition, because of the three, that's the one that is the most relatively advanced, at least in India's case. It's the domestic banking system supplemented by the overseas debt capital markets as an engine of refinance, which on the debt side has primarily funded India's 170 gigawatt of renewables, that's including hydros, maybe 140 of solar and wind. That's where the money's come from. What's missing in action is the domestic debt capital markets, which is what we're talking about here. And to me, if you want to sort of unlock the domestic debt capital markets for green, let's say, and we'll call it green bonds, four things I think need to be done. One is the bond market in general in India has been, I think, has suffered from the twin challenges of supply and demand to a certain extent. So, when you think about green bonds, where's the supply and how do you create the demand? Project loans. Project loans which you refinance through a bond issuance or green bond issuance is the low-hanging fruit. And it's also, I think, very necessary because India's 2030 targets, we estimate, is going to need $200 billion. That's the 2030 target for renewables. Compare that to the entire Indian banking system's exposure to all power sector, which is about $80 billion. You add the two, you add the two big NBFCs out there, that's PFC, REC, that's another 100 billion. You add the books of IREDA, L&T, Tata Clean Tech, maybe 30, 40. So literally the entire cumulative exposure of the Indian banking system to everything power is a bit north of 200 billion, which is exactly how much we'll need in a very short period of time. So very important to unlock the bond market that way as well. Use the supply of project loans backing solar and wind as the lever. On the demand side, I think you would need to look at creating regulatory sort of demand through let's say measures such as mandates for some of the big investors. Remember the big investors out there, the insurance companies and the pension funds. And two things, at least on the overseas capital mobilization, because unless you actually get overseas money to come in, it's just money circulating within the country. It's going from one pocket to the other. To the extent there are hurdles, and this is something we hear on occasion, at least from a foreign portfolio investor perspective, there tend to be some hurdles. To the extent they are, remove them. And finally, hedging, right? We're talking about INR issuances, which is great for the borrower because there's no currency risk, but somebody is going to bear the currency risk, which is the overseas investor. How do you sort of at least lower that? Is there something that can be done on the hedging front? Is that a hedging facility which is run in collaboration with India and overseas entities? And really figuring out how much it would cost, right? It may actually not be a lot of money out there to capitalize that and to sort of offer some measure of protection. So I'll just stop there.
Fantastic. Manish, can you pull up your slide where you identified all the suggestions, starting with taxonomy? While you're doing that, I'll introduce Neha. Neha is senior manager at CPI at New Delhi. She's a green sustainable expert. You worked in many parts of the banks and corporations. So tell us how you see from CPI what's happening on this. I just pulled this. I just wanted us to think about the suggestions that we have here. And Manish has these 4 baskets, and some of it corresponds to what Gagan talked about, which is clearly Gagan is suggesting that taxonomy, and we heard it from Chandni as well, that get that sorted out. It's like one of those things that we have to deal with. The RBI has started with it, said we have gone some way. I think the ball will be back in the court of the Ministry of Finance to decide at what pace and what is the minimum threshold that we need to set. So that one, I think, will handle a lot of things. The tiered classifications and certifications is a little icing on that cake, so we can hold off on that. The fiscal and policy levers, which is the subsidizing issues cost, the investor investments, the credit enhancement and regulatory, doesn't quite correspond to what Gagan talked about. But in a sense, it does, because what's happening is within the India has a deep financial market. However, but it's very heavily banking oriented.
Yes.
That's been there since time of independence and even before. And the problem has been that we haven't been able to nudge the bond market to take off. At the same time, Gagan is absolutely right. We have a net gap that the rest of the world should be integrating with us. Otherwise, what's the point? If we're just simply churning our own capital around to get that additional, and that doesn't meet what churn we would want to see. We want to see the finance coming through credibly. And that's where the rest of the world is very good at, because it loves these bond markets. Bond markets is $120 trillion out there. Indian market is a very bank-centered market. And what the going in deal that we have on the transition is that the banking sector can take some early risks. And then as these infrastructure assets keep providing this massive revenue, hopefully the best, by that time things are sorted out, you have the project in board, perfect instrument for the rest of the world to finance, pick it up. So that's the goal, and we see that very clearly. That's the goal. Banks, we know the business, they do the frontier, take on the risks, do the projects, and then gets it refinanced from the rest of the world, comes in smoothly. So the fiscal and policy levers is only important for that. Is there a way that, and that's, I guess, what Manish is really hinting at, use them just to tweak it so that we can get this term transformation and integration of the our financial markets faster and easier and better. And that could include something to do with the hedging costs and instruments as well, because that I'm not convinced. I think I hear a lot about why you need hedging. I'm not convinced. I think people are smart enough to do that all the time. I mean, the players who deal with the bond markets, whether they really need this hedging, I'm not convinced. But
I actually want to just point out that it's the hurdle is the cost.
The cost.
true.
You know, as an investor, you would want to hedge your currency risk. As a borrower, you would want, I mean, I think it's mandated to.
Some people are quite happy holding on to the rupee long.
So that as an investor, that's okay.
Yeah.
But at least from a borrower perspective, in this case, of course, it's the overseas investor.
Correct.
But as a borrower, you know, when we go to the overseas markets as a project developer, our investors are not really giving us money to speculate on the currency markets anyway. You know, our cost of capital is based on that.
So maybe, Manish, there's a little bit on that hedging instrument we can probably introduce somewhere in the paper that would be helpful, I think, for the general readers to get. And then there's the awareness, I'm leaving the awareness building and innovative strategies a little bit at, we'll come back to, is there anything specific thing that you wanted inputs on there? I think those are, finer tuning in. So let's hear what's Neha's take on this.
So, Gagan actually set it up pretty well for me. I would want to break it into two parts. There's domestic issuance and domestic capital raise that you need, and then there's the international one. We do the landscape report. The numbers very, very clearly state what ma'am also said. So far, the climate journey has been financed domestically. It's 85% on an average domestic, only 15% international. But going to the green bonds or thematic bonds. So one, the hard-to-abate sectors will find a challenge in the green bond because they need transition bonds or sustainability-linked bonds to come in because they will not adhere to the conditions required by green bond. And I think everyone here at the table will agree on that fundamental premise. But if I was to break it up, in the domestic market, right now, green bond issuances are faced with three major challenges. One, the cost of issuance, there is a greenium debate. When we talk to issuers, it's very clear that the amount of work required to issue a green bond does not justify the returns that are coming because the greenium as such does not exist. There was an interesting discussion a few days ago. We were in a forum and the simple question was, greenium for whom? Is it greenium for the issuer or greenium for the investor? Because the person issuing is saying, I'm doing a good deed, I want benefit. The person investing is saying, I'm doing a good deed and I want a benefit. So the question is who's bearing that greenium? But I think the way that it could potentially be looked at is that the greenium is for the borrower because they are investing and maybe the HNIs can take on that cost, maybe. But the issuance cost, ma'am, what you mentioned about the cost of certification is very high for domestic players. That does need to be factored in. That cost adds to the cost of issuance of a green bond. It does not. So as it was put, whether I issue a green bond or a normal bond, I'm getting the same price in the market, but my input cost increases tremendously for the green bond vis-a-vis the corporate bond. So what's the incentive? On top of that, the use of proceeds is very, very stringent and needs to be met. If you're not meeting it, the risk of greenwashing arises. So the assurance frameworks are still coming up in India, and those need a lot more focus on. Now, if you were to go to the international market, there is a lot of money. You have sovereign wealth funds, you have pension funds, you even have private investors. Is there a way, and this is maybe sort of stepping into the partnership area, but what I'm trying to say is there a way to have kind of a private placement partnership in place for issuances of these bonds so that you have the demand? Because what Gagan rightly pointed out, it's a supply and a demand. So even if you have the supply, where's the demand? Is there a way through partnership, a mechanism to sort of get the demand in place, which makes it easier to issue the thing? And the sovereign green bond domestic issue has been a huge, huge success. Given that there is fiscal capacity, is there a way to look at the sovereign green bond international issuance to raise that money from international markets? Those are the two things. And to add, and I fully agree with what Gagan is saying, there is a hedging challenge. The cost that gets added on, even if it's, let's say, 300 basis points, is too much. And the current regulations do not support the hedging facilities that get designed. However, the role of IFSC in this regard becomes very important, actually, because so they are one regulator playing the role of RBI, SEBI, IRDAI, and PFRDA. So if we look at IFSC, given that there is standardization of some sort across different IFSCs across the world, whether it's Singapore, Hong Kong, Dubai, India, that gives confidence because it's not new, it's not India specific, which is what a lot of international investors and what he also said, that you don't have a common definition. So there is standardization at that level. Can we leverage that? And the second thing is, can IFSCA as the regulator play a role? And the point wouldn't be to say that you do not have regulations or you bring out new, but can they be a little less stringent than what they are in the domestic context? And this will need to be explored because there will be multiple avenues. But from an international perspective, can that be looked at? So those are
Perfect. So, I wanted to ask you this, and I think it's true for all of us. I think there is a perception that we in India, in the financial sector, worry about tenths of points.
Yes.
And there's an obsession with worrying about tenths of points, as opposed to finance. What it does, you're building 20-year assets. And when when you have an international bondholder coming and willing to finance you 20 years, the last thing they want to do is nickel and dime things. So that's my problem. I mean, as an Indian, I have this problem. If I go to the bank, I'll argue to death about how much is what's the best rate you're giving me? Is it 7.95? You're giving it's a great thing for a CFA to do. That's the job of the CFA. The investor is interested in talking to an entrepreneur on a much more longer term vision. Where are we going with the transformation of the just transitions, in the energy transition, in the field of hard to abate sectors? And there, I think it's partly our own problem that we've allowed the CFA to be, at the top of the heap because we just don't want to have to deal with this complicated finance question. That's a backhanded way of saying I buy your story about that it's very costly to get a green bond issue to meet all the assurances that investors are seeking in, but these are worth investing in.
I agree.
It's worth for the companies to think about how they should invest in it. It's worth for us in the ministries and in the RBI and elsewhere to clean up the app and make it a standardized product that's easy. We don't need to follow EU 100%. We don't need to follow China 100%. We will devise it ourselves as to what is best for us. And believe me, markets like that assurance. Markets like deal with a partner who knows exactly what is to be done and has a very clear vision, not the nickel and diming of, can I get 100 points, 20-year money that's coming. These are people who are going to come in. So to that extent, I'm just questioning ourselves that sometimes we get carried away with these details. So clearly, taxonomy becomes critical. Clearly, there is a cost to be paid for getting a green or a transition bond, and there's clearly got to be assurances that if there are players who don't actually conform to what the purposes stated were, that's what legal firms will look at. And I was reading Baker and McKinsey, because I said just before coming, and they are very clear, they want absolute assurance that the money is not going to get run away into something else. So I accept all that you said, yeah, but I'm pushing us to move towards a possible world as opposed to dealing with a world that's, has 100 problems that we have to solve. We'll solve that problem, which takes me to partnerships. So maybe we'll just spend a little bit, you've still got 10 minutes. We started a little late, right?
So maybe 10 minutes more,
10 minutes more is okay.
so 15, 20.
Because this is a tremendously important subject that we're touching on, I think, for us on the financing.
I think from it goes.
From it, yeah, I'm going to give Pramit the chance. So Pramit, one second, please. I should introduce you. You are Associate Fellow at the Observer Research Foundation. And again, you are one of our partners who've been watching all this been happening. Your expertise is on sustainable mobility technology of low carbon transition technology. Tell us what is your view.
Points have been covered. I try not to repeat. Maybe just on the bonds, the green bonds, we think three possible solutions to some of the problems forward. I think the first is on getting the kind of foreign international capital into the green bond market. The credit rating issue is substantial. No matter how much you might solve domestically, if there is a bias in the way India or any developing country is rated, the demand to invest in these economies will stay it won't come in. And I think the kind of argument there has been, is there a bias or not? This argument has been going on for a while. The problem is these ratings are based on domestic changes, which happen in one country, but maybe not in the others. I think COVID was a time where all economies saw a big kind of similar impact on their economy. And I think some of the numbers sort of show that there is a bias. I mean, between 2020 and 2021, the economic growth in advanced economies was double of what it was in EMDs. Debt to GDP in advanced economies rose 20%, 9% in EMDs. But if you look at downgrades from the three top credit rating agencies, there were 125 notches for the EMDs and only 9 notches for the advanced economy. So I think that is a clear picture that there is a bias in that process. How to solve the bias is something that I think we should debate upon. I think one thing, I think the BRICS has been proposed in the BRICS to come up with a separate credit rating agency. I think Russia, as it takes over BRICS, this is one of the key priority areas this year. So maybe there is some push on that, but I think we should be engaging more on this topic. How do we fix the existing systems, or do we need a system of our own? And what have we learned from past experiences with this? The second is on the taxonomy. I think, there have been multiple efforts to come up with a green taxonomy. But I think if you just look at the bond market, the green taxonomy will deal with much more than just the bond market. So, but for the bond market, there is a possibility to create a specific project pipeline, which is, say, a taxonomy for the bond. There is guidance from the SEBI, but can we also create an actual pipeline? And this doesn't necessarily even have to be done by the government. It can be done by, say, something like the NDB, and not just for India, maybe for the BRICS countries to start with. So maybe that's a way to build the bond market without having to create a taxonomy for the country as a whole, which faces the problem of, does it mean you're channeling finance away from sustainable development to just green and climate? And on the third, domestically, I think maybe a couple of things. I mean, I agree with everything that's been said, but maybe 2 points on right now, if you just move from green bonds and look at the bond market in general in India, it's largely driven by the GSECs. But the GSECs and the corporate bonds have separate regulatory structures right now. The linkages between the two maybe are not that strong. So maybe looking at how you bring in a single regulator so that the signals from the GSEC market can better go into the corporate bond market. I think these were one point. And also generally on, I think there has been some progress on this in terms of the regulations for FPIs. I think one of the problems has been that there are various regulations which have stopped money coming in. And I think there's a need to look at how you actually kind of create a better regulatory system for the FPIs to allow more to come in. So just thought maybe these are some additional points.
Terrific, terrific. We are all recording everything, right, Manish? So these are very valuable. Anything else you want to provide to us in a written form is very welcome. And I guess the idea takes us to partnerships. What we'd like to do from TERI's point of view is that the topic is so important that we'd like to provide continuing updates. Let's put it this way, updates to all the players, including to the government, so that you're kind of, and we should find a mechanism where and maybe we can point to your partnership slide if we can. Yes. So I think Manish has given us an interesting kind of 5 headings under which the partnerships can be thought of as working with each other or picking which ones are best to work with. My take on partnerships is that in India, we actually have a slightly different problem, which is that every partner has their own favorite hobby horse that they'd like to push. And this is it's inescapable. I mean, our partners we ourselves have our own biases. I mean, it's not that TERI doesn't have biases. And it's partly we are kind of differentiating our own specific areas of expertise with a view to be able to influence policy. That's what we're after. So we're all after you, Charlie, trying to influence you to get to where the market wishes to be at. And in the process, I think what Manish is hinting is there may be a better way for partners to actually talk to each other a little bit more before you crowd the space of policymakers come together and talk about what are the really 4 things that you think we need to do, and just figure out a way so that Charlie doesn't get 4 different reports and all 4 going in 4 different directions. And it's very hard to figure out. So Cicero comes into the market. I know what Cicero is going to say. I know what CPI is going to say. Guaranteed, I can tell you what CPI is going to say. I can even tell what TERI will actually say. So we all have our little biases. So the search for partnerships is a tough one. So Manish, did you have any sense of how you think these partnerships actually is going to work out?
I think the partnership is more in terms of what we are thinking here is that some of the problems and suggestions that have been mentioned in the first round of discussion, what kind of partnerships would be able to address them? And that's and maybe some sort of what you have just said, it's more in the form of like what kind of conversations would help us understand it better. But the question is there are different types of actors coming up with their own kinds of partnerships. ADB has a partnership. I think the partnership that the ADB has with Sri Lanka now on MSME revival is a very interesting one to see with that because it's emerging from crisis and what's happening with that partnership. So those kind of lessons and what future direction they give us. That's what I'm more interested in, that what kind of policy choices that each of the different actors should make in a manner that they somewhere converge and they converge soon.
Okay, let's open it up. So obviously you're after the even bigger partnership, which is what's going to happen at that interface between India and the rest of the world. So each bilaterals will have different points of view. You have the G20 frameworks, which have a different point of view. We'll have somebody talking about the hedging transactions and what's to be established at the Bridgetown part. So all kinds of things going on. I think for us in India, where I think our partnerships at a more granular level within the country helps is if we all have a combined sense of actually for India, this is what is really critical. And therefore it becomes easier for that other bigger set of partners. And ADB, World Bank, MDBs are actually been part of us for a long time. So I'm counting them as part of the
India owns them.
India
Shareholders.
Correct.
So partnership on top of that.
So I'm counting, but you could actually be playing a critical role in the MDBs. I think the space of MDBs is a very powerful space within.
If I can just very quickly, and now we're running out of time, I'll just speak about philanthropies because that's come up quite a bit. And that's, for me personally, it's a pet topic because I think it's an under-examined area. I'll just give you a very quick statistic. As recently as 2020, McKinsey put out a report saying that in 2020, $60 billion of philanthropic capital in the US, less than 5% went for climate or energy transition. I haven't looked at the most recent numbers today. I'm sure it's getting better, but I think that's a huge untapped market there. As you said, a lot of them are still looking at pet projects, hobby horses, specific areas. I think where there's a lot of pressure on MDBs to do more, and we're happy to step up. But the fundamental problem is we don't have unlimited sources of concessional capital. We are a AAA rated entity. We borrow from the markets, lend, into our countries with a minor, margin for our costs of operations. So we only get concessional capital from our bilateral donors, and that we know is a limited market, or we get it from the philanthropies. That's it. From our operations, we are not able to generate much concessional money. So when we talk about any clean tech project, you're looking at 5, 10, 15% concession of that capital cost has to be concessional. I mean, hyper concessional. It's not even MDB rates. Increasingly, what we're finding in countries like India, we're not competitive because we lend in dollars. SOFR plus the hedge, plus the transaction costs, plus the Ministry of Finance, on lending, we are higher than GSEC. I mean, I'm hearing it every day from our clients in India. And yes, they will nickel and dime you on 10 basis points. And I'm saying, we're not in that space to compete on 10 basis points. Think of us as your long-term partner for 25 years. And they say, we don't want 25-year money. Give me 7-year money, but give me cheap. But I'm saying, I'm going to give you $3 million of technical assistance. We'll hold your hand through everything. It's not working. So I think back to the point of the philanthropies is that we need to look at ways in which they can bring in their grant financing to leverage at scale. And I'll just speak about a very quick example of the hedging costs. There's a professor, Pankaj Jain. His papers are quite interesting. I would suggest the team to look at it. He's at Columbia. He's put out this paper that says essentially what you said, Gagan, is that you've got all these domestic issuances in local currency. You've got foreign investors that are sitting outside because they don't want to take the currency risk. So can we bring in an intermediary that essentially does this across multiple markets so as to manage the currency risk so that the intermediary is essentially helping with that whole currency interface. So this intermediary has to be somebody like an MDB who can take on that multiple markets, take on that risk. So by having a complete basket of issuances across markets, you can actually minimize that risk. There may be some minor losses at the end of the day, which a philanthropy could step in and cover.
But then you run into the problem that the credit ratings of each of these multiple partners may be very different.
Sure. So you need a very strong, that's why it's an MDB like aggregator or a group of MDBs may have to actually take this on. So this is a concept that an academic has put out. we're actually looking at it closely, having conversations, trying to see if this is something. And you mentioned about, corporate, G2G, hedges, right? And also guarantees. So I think this is a space where philanthropies can think scale instead of pet projects.
Okay.
Here and there.
Okay.
I'll stop here, sorry.
I wanted to give us a little space to the people here in the room on the back. If you had, are any questions, thoughts, comments? Yes, please.
Very interesting conversations here, and I know that, so I am Sunita, and Dr. Sunita, and I had assessment for 9 currencies. We are into cities and into residential development. And my very good friend, Dr. Patri, and we have JSW Prabodh, Prabodh. They have done the bond issuance, right? So he said, Sunita, why don't you look at it? Now, my CFO can raise money very easily. And the kind of investors that we work with are very high net worth individuals. And they've been with us for 40 years. They have stayed with us while our CEOs have changed 75. So that's the kind of relationship these HNIs have with the company. And they have kind of nurtured the company and stayed with the company. Why would my CFO go into the trouble of issuing a green bond? And I really understood when Neha was saying, we'll have to do this, and the borrower probably. So what is it? What is in it for the CFO to change the way he's financing the projects? And also, I don't understand all the terminologies. I'm trying to understand this. And I spend a lot of time with the CFO's team. Even the KFW fund that was available with SBI for climate financing is not going to get returned because SBI sat on it.
Good point.
SBI sat on it. They could have dispersed it, but SBI wanted to disperse it to large developers who are building in Maivan. Maivan will not give you that RTV value that they are asking for. Okay, they should have gone to the small developers and dispersed in small amounts. They did not go to anybody.
True.
Okay, and that is a huge, quite a huge sum. It is in a few millions. I don't recollect the number.
100 million.
So, yeah, it's how much?
100 million.
Yeah.
300?
So that money is going to go back. I'm still trying to explore. But then the amount of money that we require per project is not too much. So it's in 200 crores or 400 crores or 300 crores, something like that per project. So why would my CFO and his team boil the ocean? There is our long-term investors are sitting and willing to invest in the company. So they're going to do its business as usual for them.
Absolutely.
How do I get good money from at what interests my CFO? So we do work with IFC, and IFC has funded our industrial cluster project. Okay, so we have got actors who has invested in us. Again, it is a ESG related funding that has come in. We do work with pension funds. It's not like that we don't work with pension funds, and they evaluate us on all ESG parameters. But for a business to actually change the way we are doing business, what needs to be done? Because my CFO is still doing what you just said,
I'll come back to that question. It's a very important thing. Can I just pick up any other comments, questions? Yes, please.
Very good. Just for my background, I help SMEs decarbonize. That's what we do for the data platforms that can do that. The conversations that we have with SMEs is what brought me to this table to understand what the financing side of the world is. Two thoughts from those conversations for your consideration. One, going forward, especially from a market perspective, what I think might be valuable for us to look at is today's scale-up capital that an SME is raising. Can you force it to become green transition capital as we go forward in probably stages? Which basically means as an SME, if I'm raising, let's say 5 crores or 10 crores for scaling up my operations, tied into greenification as well in some format so that you start pushing the SME space in that sense. And that brings me to the other thought, combining a lot of things that have been said. I'm wondering whether the traditional banking channels that we have and the regulation mechanism that we have is even suitable for green transition. Do we need to create a special corridor or probably a special pipeline for green transition and take risks into account from the technology perspective, from a market perspective, and from an execution perspective and assurance perspective, all of these into account, and allow financial institutions to create a separate pipeline governed by maybe different norms than the typical banking regulations, because the nickel and dime push that you mentioned about can be overcome if you create that pipeline separately and think towards that. These are 2%.
Thank you. I think we'll close, right, Manish? Yeah. We are,
Yeah, I think.
any other burning questions? Otherwise, we close for lunch. No one should stand for that. But just on that question about both yours and the previous one, there is a big dilemma that we are facing in India, which is, imagine that there is in the India's transition journey, and I'm not saying just green, it's developmental, it's SMEs, it's food, water, all these transition journeys. We know for sure that some of these are amenable to bond markets, long, safe capital that comes in with view to the long term and not just here and now relationship-based banking, which is served. I mean, there's no doubt it's our anchor, but we can also add on and think about this part. And there is a question in my mind whether how do you mix being and the concessionality, and the question that why should India move faster in that direction, if you will? What's the additional capital that's coming? So those are questions that I think are being asked more and more widely. And at some point of time, it comes back to the partnership question. At some point of time, we will actually have to talk to our partners about what is the concessional finance coming to the table. Concessional meaning long, extended, and to allow us to do the kinds of transitions that are, and bond markets will remain pretty. Thank you, everyone.
Just remember that both Manas and Chandni had said that they have a quick point on partnership to make. Maybe did you? Sorry.
No, so that was initially, and yes, I think that's been discussed, raised by Sir, that, we have all kinds of partnerships at present juncture. We have some specific issues with JET-P, which is because they wanted us to phase out coal, and that's not something that we could have done. So there were mine closures being sought and not phasing in as we would want to do. But then there are certain partnerships that are now actually emerging. So philanthropies, many of the bilateral, country partnerships have now started bringing in the philanthropy part. So it comes through the country, and it is basically philanthropies that are funding. That's still at a very nascent stage. That is what we are seeing, where the push is coming, but led by the concerned developed country in that. But pet projects, I would say, will continue. Yeah. So they decide where it goes. They have their own idea of what should we do, which is a problem, which can be a problem.
Honestly, sorry, go ahead.
No, I mean, some of the things were said. I just wanted to make the point that what you also said, that a lot of the development partners work in silos and they have their own turf, right? And I think it's imperative for the development partners to start talking to each other and see where the common ground is. I think it's also expected, and I don't think it will change, that every organization has their focus. So they will probably come in with their expertise, their focus, and offer it, which is fair and fine, I think. But before it gets to that stage, maybe there has to be a mechanism where the development partners sit together in a forum like this probably and talk about, well, this is what I can bring to the table, this is what you can we create a common package that then goes to the government, and then they have a discussion, something like that.
So thank you everyone for attending. I just wanted to end on a positive note. That sometimes I think tend to kind of, dwell on all the problems that we have. I think, as I said at the beginning, we are at the cusp of a change. Dramatic change. It is moving at a pace which the rest of the world sees as driving many engines that are changing. And the bond markets are getting ready to step into India in a very big fashion. A little bit of partnerships, concessional funding, directed, targeted will go a long way. And of course, taxonomy and all those other issues we'll have to deal with. And our CFAs are very smart, by the way. Our CFOs are very smart. Once they see that the world is changing, they will switch over to the long-term investment horizons very much. I have absolutely no doubt. On that note, thank you so much.
Thank you.
Everybody, has been very enriching. I just wanted to make an announcement and information that the lunch is now being served. I'm sure all of you have got this card, but those who don't have this card, there are lunch coupons outside. Thank you very much, and everyone is.